All right, today we're going to peek at Aurora. So like my other videos, what we're going to do is we're going to have a look at the most current month of data we have in the Toronto Real Estate Board, which is May 22. We'll compare that with what happened a year ago in May 21, and then we'll have a look at April 22 as well, just to kind of give you an idea where the trends are going. We'll start with the numbers. So new listings coming to market across all home types in Aurora. A year ago, 202, 134 sales through the month, and 152 active listings. And the active listings are what didn't sell and carry over into the next month. April 22, we had 223 new listings come to market, 76 sales through the month. So year over year, sales down a little bit, and 196 active listings. So that inventory that's hanging around, months of inventory, if you will, what we'll see later, is starting to build. May 22, 211 new listings come to market, 78 sales. So sales staying about on point, and less listings coming to market, and 188 active listings that carried over into June. If we're looking at the money, $1,247,000 was the average sale price across all home types a year ago in Aurora, $1,512,000 in April 22, and currently trending at $1,443,000. Now this reduction in average sale price is pretty consistent with what I'm seeing across the board in the GTA right now. There are some areas that are a little more pronounced than others, but you have to remember it is an average sale price. So if you have more multi-million dollar properties selling one month as opposed to townhouses, semis, and condos, it's going to drag this number around a little bit and be, overstated or understated. SNLR stands for sales to new listings ratio, refers to the absorption rate. So it tells us out of the homes coming on the market each month, what is the percentage of them that are actually selling? So 66.3% of the homes that came on the market in May 21 sold, 34 in April 22, currently trending at 37. So this is actually for sellers, this is what you want. You want this absorption rate actually climbing. And this is how we determine whether it is a buyer's market or seller's market. So when we are over 60%, that would tell us that there is more demand than there is supply. So that would be a seller's market. And that's where we've been for the last 18 months to 2 years or so. 34%, anything under 50% would tell us that there is more supply than there is demand. And that would be a buyer's market. And then when you get between 50 and 60%, that's what we call a balanced market. So there's enough supply to meet demand, right? Months of inventory remaining. So what this tells us, with the homes on the market currently, if nothing else came on the market after today at the current rate of selling or the current rate of consumption, how long would it take to deplete the inventory? So 1.1 months of inventory a year ago, 2.6 in April, currently trending at 2.4. So we are seeing the absorption rate climb, and we're seeing the months of inventory go down. So this is actually, a sign that the market had, at least for this month, has gotten a little stronger from a seller standpoint. But certainly, in terms of overall bias, we are sitting in a buyer market right now. Sale price to list price ratio, homes selling 102.9% of ask a year ago, 106.2 in April, and currently trending at 100.4. So this tells me with 100.4 that the majority of homes you're seeing out there are not being underpriced to the market. So for example, the house that's priced at $799 that sells for $1,001,000, we're seeing the vast majority of homes out there that are being priced accurately to the market and awaiting offers as they come in. So this is again a slower moving market. For sellers out there, it's definitely not a market that you can play around with price like we saw earlier in the year. You want to make sure that your price and things are dialed in. But with 2.4 months of inventory, the market has slowed down, but it's not necessarily a slow market, right? There are other, Richmond Hill, we're in the 3 to 4 months of inventory. There are other areas where the market is actually less strong, you could say, right? So days on market to get a home sold, 15 in May, 11 in April, currently trending at 15. So again, 15 days on market, certainly not a bad number when you look at, as compared to what happened in 2017. We were seeing, 3 months, 4 months, 6 months, 8 months of inventory hanging around, and days on market definitely were definitely more in the 30 to 40 range. So for some houses, yes, but again, if you're priced right and you are showcase property online, your house should be selling quickly. And if you need some help with that, I would be happy to chat with you. And for buyers, this is definitely a market where we are seeing the introduction of conditional offers again. We are still seeing a number of multiple offers, but those are more, I would say, in the outlying areas. areas like the Durhams, in Simcoe County, but in York Region, I would say we're not seeing a lot of multiple offers. Any questions about how any of this information pertains to your home or the home you want to buy? I look forward to connecting with you.